Hi, my name is Tom Seifert, Senior Advisor here at Fairport Wealth, and today I will be talking about individual federal taxes and a few of President Biden's desired tax policy changes. Now that the presidential election is behind us, coupled with the fact that the Democratic Party controls both the House and Senate, albeit by the slimmest of margins, there is a good chance that there will be some changes in the tax law in the not so distant future. Biden ran on raising taxes on both large corporations and on wealthy individuals. He outlined raising $3.5 trillion of additional taxes over the next 10 years to pay for some of his key initiatives around healthcare, education, and the environment. However, given that we are still dealing with the pandemic and the economy, while improving, remains fragile, and as such, we don't believe that any major tax legislation will be put forth until mid-year at the earliest. This legislation could very well be included in an additional economic stimulus or infrastructure package, but you never know. Be assured that the financial advisors here at Fairport Wealth follow and plan around taxes, both income and estate. We also keep abreast of pending tax legislation and its potential impact on your specific tax situation, as well as its impact on your investments. The general Democratic Party tax policy themes bantered around on the campaign trail were basically increasing the marginal tax rate imposed on high income individuals, including an increase to the capital gains tax rate, implementing additional payroll taxes on high earners, and tax wealth generally by either an annual wealth tax, which is highly unlikely, or a greater estate and gift tax, much more likely. Next, I will endeavor to outline a few of Biden's specific tax policies proposals relative to individuals. Taxpayers with income over $400,000 will bear the brunt of these proposed tax increases. What constitutes income is yet to be defined. Is it taxable income, adjusted income, or something else? Regardless, here are some specific ideas put forth by President Biden, and they include restoring the highest marginal tax rate back to the 39.6% rate from where it stands today at 37%. Expanding the 12.4% Social Security tax to include all earned income over $400,000. Currently, this tax stops at $142,800. He would also like to cap the itemized deduction tax benefit at a flat 28% versus the applicable higher marginal rate you might be in. Also talked about restoring the 3% piece limitation on itemized deductions, which basically reduces the allowable itemized deductions further as your income increases. And also talked about phasing out the new 20% qualified business deduction, which is namely the Section 199A deduction for pass-through and certain self-employment income. You can see how these proposals will dramatically affect high earners and the amount of tax one will pay. In addition to raising taxes on income, his proposals also include increasing taxes on capital, such as taxing long-term capital gains and qualifying dividends at the highest marginal rate of 39.6% for incomes over $1 million. Currently, these items are taxed at the highest rate of 20%. That's a big difference. Also talked about eliminating the concept of basis step up to fair market value at death. This would be a real potential administrative nightmare, as inherited assets could have been acquired over several decades with little or no existing records. And this item could affect every inheritor. Also mentioned a reversion of the estate tax exemption back to historical levels, which means possibly 5 million or perhaps even 3.5 million from the current generous exemption of 11.7 million. Lastly, he would like taxable estates would experience a higher rate from the current 40% rate to a rate of 45%, or if Bernie Sanders' plans is considered somewhat, upwards of 77%. On the flip side, for lower income households, there are a few benefits. These benefits are basically in the realm of refundable tax credits, which means you don't need to have paid in any taxes to get these credits refunded, versus tax deductions that just reduce taxable income, of which you must have in order to get any benefit. The items listed on the slide are increases or expansions to already existing tax credits and a few new ones as well. These are increasing the child tax credit, expanding the Affordable Care Act premium credit, expanding the earned income tax credit to those childless workers over the age 65, new renewable energy credits, a new renter's credit and first-time homebuyers credit, a new caregiver credit, and expanding the retirement savings credit. Most of these credits, however, are phased out or eliminated completely at certain income thresholds, and thus are for the benefit of lower income households primarily. Many of these proposals are considered to be a much needed safety net, or they simply encourage noble actions. All of these proposals discussed are just that, proposals. But if President Biden can get some of these items passed into law, you can see that taxes will be increasing, especially for the well-to-do. Time will tell, and much needs to be prioritized in Washington, D.C. As mentioned earlier, your Fairport team will endeavor to keep abreast of the ever-changing tax landscape and help you plan accordingly. I hope you found this informative and helps broaden your understanding of Biden's proposed tax initiatives. If you have any questions or would like to discuss any of these topics in further detail, as always, please reach out to your Fairport Wealth team and we will be happy to assist you. Stay safe and take care.